maybe we should just start by getting a sense of what else is happening in the background with regards to how the central bank is looking to keep the naira stable. Of course, we know that they intervene twice a week. On Monday and Wednesday this week, they've sold a total of $350 million, but I hear that they're doing a lot more than that.
Yes, Wally, how are you? Good morning. Essentially, we've seen some upward pressure on the exchange rate. It started a few weeks back. It became more pronounced last week when the rate crossed the 159 levels. But we have seen the central bank, apart from the auctions on Mondays and Wednesdays, where it sells dollars into the market to banks, has also come in to exercise its mandate by direct intervention into the market. So almost on a daily basis, since about Wednesday last week, we've seen the central bank come into the market to sell dollars and moderate the rate.
All right, so that's on top of what they do every week. They're selling directly to a few banks.
Yes, they're selling directly to banks. Yes.
Well, talk to us about the supply dynamics right now. We know that foreign portfolio investors have slowed down a little bit, perhaps looking at things happening in Greece and the rest of Europe. And but we also know that the oil majors also supply the market, and we've seen the naira lose some ground against the dollar recently. It suggests to me that there might be some shocks with regards to supply.
Yes, I think basically the problem in the market right now is that it's more of a supply problem than a demand problem. You'd realize that for quite some time now, we've had a lot of portfolio investors coming in from offshore, particularly in the government securities market, T-bill market, and that has provided a steady flow, a steady supply of dollars into the market, which has been able to sort of temper demand. But right now, in the last few weeks, we've seen a sort of slowdown in that kind of flow, in those flows, and this has resulted in demand sort of tipping over and being more than supply. So we have a situation right now where the offshore flows are not as steady, are not as much as they used to be, and also we have a situation where demand, which probably is constant, has sort of tipped over supply. So that would account for some of the pressure we've seen on the exchange rate.
Right. Clearly, one reason the central bank is intervening in the market is to reduce the divergence between the central bank rate and, of course, the interbank market rate. We've seen that divergence increase a little bit recently. I just worked it out. It's at about 1% plus at the moment. But talk to us about the risks that we face if we see that spread increase over the next few weeks.
Oh, I think the central bank itself is very closely monitoring the divergence. It's actually moved by to about 2 naira 50 kobo between the rates we see on the CBN WDAS auction to the interbank rates. And the reason why it is a bit worrisome, or it's to be monitored, is that the market would watch the movement in the interbank market in the absence of the kind of statistics we used to get from the central bank for the WDAS auctions. So the movement in the interbank market is a pointer or an indicator, and so we would expect the central bank to reassure the market that what we are seeing is not imminent depreciation, because if the market considers that there is imminent depreciation, then we would probably see some importers begin to front load their transactions, and that would bring more pressure into the market.
And it becomes like a vicious cycle. The front loading now, of course, makes the naira weaken on its own.
Yes.
All right. Thank you so much, Yomi. Yomi Balogun is FX analyst at Stanbic IBTC.